Hello and welcome to the channel. In this video, I'll be going over my portfolio updates. I'll be talking about growth investing versus income investing and comparing BTC to BTCI. And I'll be sharing my investment plan. My goal is to build enough passive income to live off of my investments. And I sold some of my rental properties a month ago to buy Bitcoin. On this channel, I'll be sharing my portfolio updates, my investing strategies, and taking you through my journey to financial independence. I'm not a financial advisor, and this is not financial advice. This is just my journey. We're going to start off with my portfolio updates. I'll go over the changes I've made in my portfolio since my last video. We are going to start off with my brokerage account. I purchased $10,000 worth of BTCI this month, and as you can see, Bitcoin went down. And I hold about $200,000 worth of stretch. In my last video, I sold my stretch position, I think on May 27th. I sold my stretch position because I wanted to buy Bitcoin. Bitcoin was going down, but after that, I changed my mind and I bought stretch back. So on May 28th, I purchased stretch back, but I was able to buy it back at a lower price. I wasn't planning on it, but my cost basis was 99.04 and now it's 98.88. The reason I bought stretch back was that I don't know if I want to buy Bitcoin quite yet. See, it's going down, and as you can see in my BTCI position, Bitcoin has gone down over $800, and the distribution rate is around 26% per year. Let's see BTC. It's going down. It's currently almost 74,000. By the way, BTCI is the NEOS Bitcoin High Income ETF. 26.36%. It generates income from writing call options on Bitcoin futures ETFs. My current cost basis for BTCI is 36.91, and while BTCI is 33.83. So it went down 8.34%. So I'm thinking about waiting before I buy more BTCI. And I'm gonna park my money in Stretch right now to get that 11.5% dividend yield. See, in Stretch right now, I am making money because I'm getting 11.5% dividend yield, and in BTCI, I'm losing money. My last distribution of BTCI was about, I think it was a little over $200, and it went down over $800. And I bought it on May 15th, so I bought it about 2 weeks ago. See, I have a hard time watching my portfolio go down because I used to invest in real estate up until now, so we don't have those swings like that. Moving on to my Roth IRA, I didn't make any changes in my Roth IRA. So in my Roth IRA, the only thing is that I received my dividend for Stretch. So I received a $100 dividend. And then moving on to my health savings account. I don't know what this is. I don't know what's going on with the portal right now. But my only holding is Stretch for $5,177, and I received the dividend, $46.58. Stretch short duration high yield credit pays 11.5% dividend. I'm just gonna update my table here. If you watch my videos, you know that I like to put everything in this table. It's just much easier for me to kind of see the big picture when I see everything together, my brokerage account, my Roth IRA, and my HSA. So not very many changes since the last video. Let's just update my Stretch. So I bought it back, so 215 and 70 because I bought 200,000 worth of Stretch. My whole portfolio is about 410,000. So yeah, I still have one rental property to sell. I'm going to probably sell it in 2027 because I don't want too much long-term capital gains taxes. That's the equity from my rental property. And then here you see BTCI, my $10,000 BTCI position in my brokerage account. And Stretch, I have the 200,000 that I bought back, and my Roth IRA and my HSA is currently invested in Stretch. I want to get that 11.5% dividend, and then the rest is cash between my high yield savings account and my money market fund, the FZDXX. It's the Fidelity Money Market Fund Premium Class because you need a minimum of $100,000 to invest in it. You don't need to keep $100,000, but your initial investment needs to be over $100,000 or over. It pays a little bit higher than the SPACs, the Fidelity Default Money Market Fund. So these are the distribution rates, and this is how much monthly income this generates. The BTCI monthly dividend should be around a little over $200. And then my stretch position should produce about $2,000 a month in monthly income, and then cash another $200 a month. So it's around $2,800 a month as of now. Here is my income producing part of my portfolio, and this is my growth part of my portfolio. I haven't really started that yet because I'm holding off on buying Bitcoin because I think it's going to go down even further. And now you're thinking, what is this portfolio? Everything is cash. I literally, in less than a month ago, sold my rental property. So now I'm kind of thinking of how I should invest my money. And I just wanted to go over this because eventually I want my income producing part of my portfolio, which is this, to be about 60%, and my growth part, which is over here, to be about 40% of my portfolio. So this is how I see it. I want to reach financial independence where my dividends cover my living expenses. Financial independence is a state where accumulated assets, investments, and passive income fully cover your cost of living expenses without the need for active traditional employment. This is usually done in 2 steps. Step 1 is growth, and step 2 is income. The goal usually is to grow as fast as possible using growth stocks or growth ETFs. And then when you reach your financial independence number, the amount you have that the dividends will cover your living expenses, then you can convert your growth assets to income producing assets like dividend stocks or dividend ETFs. Of course, you're going to leave some growth in your portfolio. So once you reach your goal, you can live off of the dividends. So in general, growth stocks are good to buy when you're young and you have a long timeline ahead of you. And when you're older and you reach your goal, you convert your some of your growth stocks to income producing stocks, like dividend stocks. For an example, a growth ETF would be VOO. VOO is the Vanguard S&P 500 ETF. Invest in stocks in the S&P 500 index, representing 500 of the largest U.S. companies. And we also have QQQM, which is the Invesco NASDAQ 100 ETF. The Invesco NASDAQ 100 ETF is based on the NASDAQ 100 index. The index includes securities of 100 of the largest domestic and international non-financial companies listed on NASDAQ. Some examples of income-producing ETFs are SHD, JEPQ or QQQI, and JEPI or SPYI. SHD is the Schwab US Dividend Equity ETF. The fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Dividend 100 Index. SHD has currently around a 3.3% dividend yield, even less. And then we have QQQI, which is the NEOS NASDAQ 100 High Income ETF. It currently has a 14.11% distribution rate, and the fund seeks to distribute high monthly income generated from investing in the constituents of the NASDAQ 100 index and implementing a data-driven call option strategy. And then we have SPYI, the NEOS S&P 500 High Income ETF, with a 12.09% distribution rate. The fund seeks to distribute high monthly income generated from investing in the constituents of the S&P 500 index and implementing a data-driven call option strategy. Usually when there's a lot of growth in the stock market, the growth ETFs will produce a lot more yield than the income producing ETFs. We're just going to do an example using a portfolio visualizer, backtest portfolio. The last 10 years in the stock market had a lot of growth, and I'm just going to compare growth ETFs versus income ETFs so you could kind of see the difference. So let's do the S&P 500. Let's do VOO. the Vanguard S&P 500 ETF, and we're going to compare it to let's do SPYI. The NEOS S&P 500 High Income ETF. Reinvest dividends, yes. So we're going to compare the NEOS S&P 500 High Income ETF versus the Vanguard S&P 500, which tracks the S&P 500. What year was this? Okay, so the time period was constrained by the available data for NEOS High Income ETF. SPYI doesn't go as far back. So we're just going to compare from January 2023 to May 2026, for example. So when the stock market goes up, the income ETFs don't perform as good as the underlying assets because selling call options caps the upside. As you can see over here, if you invested $10,000, you would have $20,694 and you would have $17,698 in SPYI. With VOO, you would have had a 23.72% return, and with SPYI, an 18.19% return after you reinvested the distributions. Yeah, so as you can see, the growth ETF outperforms the income producing ETF. That's why you usually only invest in income producing ETFs after you've already reached your financial independence number and you want to live off of that income. Let's do another example just for the fun of it with the same thing with the NASDAQ 100. So we'll use the NASDAQ 100 would be QQQM. We're going to do QQQI, which is the NEOS NASDAQ 100 High Income ETF. So QQQI can't go that far back. So we're going to see from January 2025 to May 2026 only. Again, the NASDAQ 100 ETF outperformed the NEOS NASDAQ 100 High Income ETF. The return for QQQM was 30.26 during this time, and the return for QQQI was 22.71%. So that's just an example between growth and income. When the stock market goes up, usually the growth ETF outperforms the income producing ETF. But when the stock market goes down, the income producing ETF could act as a cushion because you're getting distributions and it could outperform. So that's the difference. One is for growth and one is more for income and stability. It could also outperform in a sideways market. Let's see, just for the fun of it, BTCI and BTC. So we're going to compare. We don't have a lot of data on this at all. IBIT tracks Bitcoin, and we're going to compare it to BTCI. I just want to see. Let's see how much data far back there is. Okay, so we only have data from January 2025 to May 2026. Okay, let's see how it did. Specifically in this situation, BTCI outperformed Bitcoin. Bitcoin went down almost 16%, and BTCI went down almost 11%. So when the stock market goes down, the income ETF acts as a cushion because you're getting distributions, and if you're reinvesting distributions, then it outperforms. That's just for an example. That's in a down market though, or also in a sideways market, it could outperform, but just so you could kind of see the difference. But if I think Bitcoin is going to go up, then I should buy actual Bitcoin. Now we're going to talk about my investment plan. So this is a new table. This is what my vision was when I sold my rental properties. I go over this every video, so I won't go over this again. I'm just going to point out a few main things here. In my income producing part of the portfolio, I want to invest more in BTCI and XBCI, which is the leverage version of BTCI. So that's my plan. I want to produce income because I'm at that point where I want financial independence. I want to live off of that income, and I'm willing to give up on part of the upside for the stability and the income. And also, I want to hold Bitcoin. I had Bitcoin and I sold it, and I'm planning on buying it back. I sold it so I could save on my long-term capital gains taxes. I haven't bought it back yet. I'm waiting for it to go down a little, and then I'll keep cash. I want $50,000 in Stretch and 23,000 in FCDXX. So that's the thing. I don't want to buy Bitcoin now. I feel like I should wait a little longer before I buy Bitcoin because I don't like to see my portfolio go down. I also want to take some time to kind of maybe see if I want to invest in other assets, not only Bitcoin, so I could kind of diversify my portfolio a little. The thing is, it's very hard for me to put my money, let's say, in SHD when the return is 3.3% and the return on BTCI is 26%, about 26%. So I feel like it's doing nothing. Let's say you put $50,000 on SHD, so $138 a month, and I want income. Even though SHD performed really well since the beginning of the year. It went up 17.2%. So as of now, I'm waiting on the sidelines and we'll see what my next move is. And the last thing I wanted to talk about, I also talked about this in my last video. In my brokerage account, I'm basically holding Stretch right now till Bitcoin goes down. And then I'm going to purchase Bitcoin and BTCI and eventually XBCI. So that's what I'm doing in my brokerage account, same as my Roth IRA and HSA. But since my Roth IRA and my health savings account is tax-free, this past month, I was buying and selling Stretch, BTCI, and XBCI just to kind of maximize my return. So let's see how that's going. I'm not going to go over this again because I talked about it in my last video, but to summarize, I was buying and selling XBCI, Stretch, and BTCI in my Roth IRA and HSA together. The transactions are shown here together. I combined them. So if you want, you could go back and watch the last video I was talking about it. But basically, to summarize, I made $307 compared to almost $150 if I would have only put my money in Stretch, which gives 11.5%. So I was able to get almost a 24% return. This is yearly, so that means if I do this every month, I would get about 23.86% return. And I didn't sell Stretch yet. So I bought Stretch in these accounts for an average price of $99.3, and I haven't sold it yet. But now Stretch, what is it now? Yeah, Stretch is currently $98.99. It went down, but it always strives to be around the 100. And I'm basically waiting for it to reach 100 so I could sell it. But the ex-dividend date for next month for XBCI, which I also want to buy and sell, is June 3rd. So I need to purchase the ETF by June 2nd. I have to sell Stretch before that if I want to do this. So I don't know what I'm going to be doing yet. So we're going to decide next week if I'm going to sell Stretch and buy XBCI before the dividend date or keep Stretch. I don't know yet. This is kind of like, I'm just playing around with these ETFs. So I'll keep updating you regarding my Roth IRA and HSA portfolio, and I'll see you in my next portfolio update. And subscribe to my channel if you want to follow along my financial independence journey, and I'll see you next time.